Welcome back to my channel, everybody. Thanks for tuning in. And in this video, we're going to go over a VWAP day trading strategy that I use. I'm going to break down what VWAP is, what does it mean, how is it calculated, and how can we use it and add it to our trading arsenal to form a strategy or even a system behind it. Now, this is going to be a really good video lesson. So if you haven't subscribed yet, hit the subscribe button, smash the like button, and also follow me on Instagram. I'm going to link that in the description below. Definitely worth the follow as I post daily trade recaps. I post some good options trading and psychology tips and tricks. So without further ado, let's get right into the video. So VWAP stands for volume weighted average price. And there's a calculation behind it. It's important for you to understand the meaning behind it and how it's calculated rather than calculating it yourself, with a calculator near you or a spreadsheet, because your broker is going to have a VWAP indicator, most likely in their charting platform, and it's going to do it automatically for you, and it's going to display it with a line. So VWAP is calculated, this is important to understand, by shares transacted times the share price in the dollar amounts divided by the total shares that were traded for that period. And this is best used as an intraday indicator, or you could make a strategy around it. And I'm going to explain to you the strategy that we use behind it. So shares transacted times the share price in the dollars. So if somebody bought 100 shares at, let's say, $300, that is the first part of the equation, and you have to divide it by the total shares that were traded. Like I said, your broker is going to do the equation for you, but it's important to understand how to use the VWAP. So VWAP can be used to see how efficient price is. It's safe to say when the market or a stock is trading above VWAP, it's a bullish sentiment or a bullish move. And if the market is bearish, it's most likely that we're going to be below VWAP. The reason because of this is it's a volume weighted average price. If price is trading below the weighted average, then obviously we're below average and price is in favor to the bears. And if we're trading above it, the average price, then the market or the price is in favor to the bulls. Now, VWAP also can be used for liquidity purposes. It's a very liquid area. It's an area that is basically a average price, and that's where institutional traders will be looking to trade for basically a fair value, and this is called the regression to the mean. If a stock is moving up away from fair value and the stock then pulls back into fair value to pick up more orders for liquidity purposes, then that is going to be a safe place that institutional activity is going to be around, because this is a fair value to them. And this is where price makes sense because it is an average weighted volume compared to price. So the first strategy that I want to get into is the VWAP bounce. But first, I'm going to introduce to you guys how to add VWAP to your charts on Thinkorswim. Now, with any charting platform, most likely there's going to have a VWAP study because it's a very popular indicator and it's basically true to price and volume, which in my opinion is what matters the most with trading and with any strategy. So on Thinkorswim or any other platform, charting platform, go to your study section where you add indicators. And in this case on Thinkorswim, go to studies, quick study, go to all studies at the top, scroll down to VWAP, or scroll down to V, and then the top is going to be VWAP. Now you're going to click VWAP, and now you're going to see a bunch of different lines, and we have to remove some of these because in my opinion it is too much noise, and the upper band and lower band does not matter. Only thing we care about is the middle band, because that is the average, that is the middle price, and that is the VWAP, the true VWAP line. So all you have to do is right click the study, hit edit study VWAP. You want to keep all of these studies the same. Make sure it's on a day time frame. Your deviation down is -2 and your deviation up is +2. That's standard. And then go to upper band over here. Take the upper band off, take the lower band off, and hit apply. And the only thing that we care about is the purple line. You can change your preferences to color, whatever. We care only about the middle line, and we only care about it on an intraday chart. We don't care about it on a daily chart because it does not really mean anything to us. Any intraday chart, 5-minute, 15-minute, 30-minute, the price is going to be the same. If you look on a 15-minute chart, there's not going to be a difference in price and volume as you would see it on a 30-minute. So the number is always going to be the same because the calculation is always going to be the same. So the VWAP bounce is when a stock is above VWAP and we get a pullback into VWAP. Now, like I said, you can use a other strategy around this and have VWAP on your charts as extra confirmation. So in this example, we had a 30-minute demand zone down here that formed in the morning. Fast forward to the end, towards the end of the day, price was above VWAP and we pulled back into the purple middle VWAP line and then bounced from there to a strong rally at the end of the day. This was confluent with a 30-minute demand zone and a VWAP bounce. So we had two different indicators. We had two different strategies or entry points that we could have based this trade off of. And we basically got double confirmation because we had two different things telling us that price had it. This was an area where price could easily bounce at. So when I see demand or supply hitting a VWAP zone, that's going to give me extra confirmation to take the trade. Now, here's another example. When price is now above VWAP, we pull back into the VWAP line, and when we see it start bouncing, now you could look on a 1 minute, 5 minute, 15, it's still going to tell you the same story. VWAP is going to be in the same area. You could take the trade where my yellow circle is. Once price is coming up, 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 you could take the trade. Once you get confirmation, higher high, higher low, whatever the case may be, putting your stop loss below VWAP or putting your stop loss maybe even below the wick. In this case, you could have put your stop loss right here where my cursor's at. Now look at this. So the first 1, 2, 3 candles, we had a rally, then we started consolidating sideways and then another rally up. Look how close we were hugging VWAP. When I see a consolidation point near VWAP like this and we're hugging it, like a blanket, hugging it closely and tight, this is also forming new demand as we are hugging VWAP. You could take this to the long side, putting your stop loss, below that low. And then this is now that same chart right here. This is the same chart on a 15-minute. Now look at these 3 candles right here. These 3 candles look exactly the same as the first 3 candles on a 5-minute. And now on the 15-minute chart, these 3 candles is when we were hugging VWAP a different time, where we saw it on a 5-minute that looked completely different. Okay, we rallied up, then we based on VWAP, we bounced off it once, twice, 3 times. Lower wick on a smaller time frame, you would have seen that bounce. You could take it long on a smaller time frame with confirmation to the upside, putting your stop loss below this low, or however, depending on your risk management plan. Now this is on Apple again. This is a 5-minute chart. Price rallied, pulled back, reverted back to the mean, reverted back to the average price, fair value, and this is where buyers stepped in, and we took it for another leg higher for a nice rally throughout the whole rest of the day. Now here's another example how you could use VWAP as a bounce or as a bullish indicator. So this is on Amazon, and VWAP, you have to look at the trend of VWAP. It's either going to be trending up or trending down. In this case, VWAP is trending up while the stock was trading sideways. So if VWAP is moving up and the stock is trading sideways, that means there's volume coming in and the stock really is not moving up. What that's telling me is that someone's leveraging their position, getting ready for this to be creating demand for another leg higher, and we got that demand and we got that push up higher because I saw VWAP trending up while the stock was trading sideways. Same thing with Netflix. VWAP made a nice move up. Then we were still trending up here while the stock was consolidating sideways. And on top of that, we had a pullback, regression back to fair value. You could have taken it long here, or you could have taken it long anywhere in this area, putting your stop loss, below maybe VWAP or below that wick. So this was about a 2.5 point risk for a reward of about 5 points. So 2 to 1, not the best risk to reward ratio, but it's just the strategy behind it, and it all depends on your entry points. So uptrending VWAP while the stock is sideways is a bullish pattern. And another bullish pattern is going to be when a stock pulls back, reverts to fair value after a bullish move to VWAP, picks up liquidity down here for another leg higher. Now this is a Boeing example. This was recently where Boeing pulled back on a Friday. So this would have been a lotto type of a play. I don't want to make it seem like this happens all the time with the contracts. This happens all the time, pull back into VWAP. Not all the time, but frequently. We pull back into VWAP, you take it long. At that time, the contracts were at $1.10. And by the time we got up to high a day, in hindsight, from just high to low, I'm not making this a possible scenario. I'm just saying the power of options. We had a 300% return if we took it when it bounced at VWAP and sold at high a day. Contracts were $1.10, went to a high of 437. Now, here's the next strategy, which is a VWAP rejection. And now this is a bearish position where most likely you're going to be playing puts. So a VWAP rejection is a bearish. It's obviously because we're below VWAP. The stock makes a move to the downside, and then we rally to the upside, and look where we stall at. We stall at VWAP. Also in confluence with a 5-minute supply zone that formed intraday. So we have not only a VWAP rejection, but we have a supply zone. This trade I'm taking 100% of the time because we have two different things telling us that we have confirmation to the downside and we have confirmation for puts on the short side. Same thing with this one. This is now Roku. Roku made a nice move down. We bounced back up. You know, relief bounces are normal. On bearish moves on to the downside, you have to have a relief bounce. You know, you can't have so much selling pressure without any of these shorts covering to the upside. So you're going to have bounces, and you want to see VWAP reject. VWAP in this case pulled up, rejected. Also confluent with a 5-minute supply zone. That's my double confirmation to take it short. Okay, this is a good example because we're always going to have VWAP on our charts, so it's important to get rid of the noise. You want to see a stock make a decent move and have decent space, not trading near VWAP for a while. For example, let me go back to this Amazon chart. Price moved down where my cursor's at and then immediately bounced and rejected VWAP. Yeah, you could have taken this trade here, but the quality of the trade is much lower compared to the fact of later on in the day. Because we were trading in such a tight range over here. Fast forward to about 1:30 Eastern, close to the end of the day, price rallied into VWAP and look exactly where we stalled at, right? I mean, it's a very good strategy. It happens not every day, but if you're trading the normal market leading stocks that have volume, have liquidity, then VWAP is an important indicator to have on your charts. Again, here's another example. Came into VWAP once, twice. You could call this a double top at VWAP. That gives you your extra confirmation or double conviction to take that trade short. And, you know, putting your stop loss above VWAP, above the high, above a pivot zone, above a supply zone, whatever your strategy revolves around. This is just something to add to your arsenal and add to a strategy to have something, you know, behind it with other things. I use it in conjunction with my supply and demand strategy, and it works very, very well. So I hope you guys enjoyed this video. It was a quick one. It's a very simple strategy. It's just a good tool to add to your charts. So if you like this video, smash that like button, follow me on Instagram, and definitely subscribe to my channel. Browse through my other videos. They're definitely worth a watch. Now, before I end this video, I just want to explain that it doesn't happen all the time. It may happen a couple times a day on different stocks, so it's important to have multiple things up at once and you know, have it ready to go. But in this case, we had Apple, and look at this day. You know, it was just a choppy mess around VWAP. I'm not taking a trade on Apple this day because there's no clean rallies above VWAP or drops below VWAP, and we don't have clean price action around it. Same thing with this day. You know, we came down, we pulled up, but there's no, you know, trade right here. There's no trade around VWAP. Doesn't reject it. So I'm not trading that day either. Fast forward to today, same thing. We don't have a clean move to the upside, don't have a clean move to the downside, and we're trading sideways around VWAP. That's a big red flag to not use it. Now going back 2 days, we had the same example with Apple. A nice move to the upside, a pullback into fair value for another leg higher. The day before that, look at this. Pulled back down, then we popped up. Now all the shorts or any bearish position sees this rally right here, this relief bounce, and they can add to their position or open up a new position because we're obviously bearish below it, and they think that fair value is not really a fair price because now we're coming back down. So below it, and we get a pop, we have fair value, and the bears are still in control because we are rejecting VWAP.